Okay, so we had a pretty big news announcement made today in the Wall Street world, and that is that Charles Schwab is buying
TD Ameritrade.
TD Ameritrade for $26 billion, all stock deal.
No cash?
We'll find out the details as it comes out, but right now it looks like it's an all-stock deal, and it was brought about in part, or at least accelerated, some of the insiders think, due to the unlimited free trading announcement made last month by both entities, and TD Ameritrade fell by
14%?
I think that was Schwab.
Schwab
fell by
was
that,
14?
but TD fell by like over 30%. So the spread differential may have accelerated this buyout because obviously in an all-stock deal, Schwab can potentially capture that spread.
So what does that make Schwab in the marketplace, Mike?
Schwab's going to potentially have 70% of the independent broker market. And what an independent broker is on Wall Street, the Smith Barneys, Morgan Stanleys, Merrill Lynch's of the world, those are all proprietary institutional Wall Street firms that have their own products. So when they come to an investor, they say, come to Merrill Lynch, we have the best managers and we have the best advice. At least traditionally, that's how it was positioned. Things are changing.
Super high minimums.
Yeah, it was high touch, high minimums, high costs. And then these discount brokerage houses came out. Charles Schwab, TD
20 years
Ameritrade,
ago.
30 years ago.
30 years ago.
Yeah, E-Trade, Scottrade.
Yeah, discount brokers.
Yeah, so this new market emerged, and it really was an independent platform of companies on
kind of
Wall
a
Street.
do-it-yourself for the do-it-yourself investors?
Yeah, it was less touch, more automation, the lower cost, and people like the ability to kind of take control and do it themselves.
But call if they need some help.
They could pay a little bit more if they wanted to talk to an advisor, but had the option not to if they didn't want to. And I think one of the big things was that these firms were independent, and what that meant is they didn't offer their own proprietary products. So that's a big deal.
Yeah, it's a really big deal. So when a big company like Schwab and another big company like TD merge, there's a lot of confusion where if you're a TD investor, a client of TD and a client of Schwab, what do? What's going to happen with the end result?
You got a Schwab account.
I got one of each.
And
so
a TD account.
Yeah, so I love the TD interface. I'm not super happy with the Schwab piece. So it's just a difference. I prefer to trade on TD than Schwab. And I love the fact that TD is independent. They're unbiased. They don't have their own TD Ameritrade mutual funds like Schwab does. They have their own. And so why wouldn't they recommend their mutual funds over another independent mutual fund company out there? Well, there's no incentive. There's probably big incentives to recommend their own.
Yeah, I think that's a key issue, Todd. If you have your own set of mutual funds, which Schwab started rolling out several years ago, now you can't say you're independent anymore. So TD Ameritrade was really the largest independent broker platform left.
Right.
They did not have their own proprietary mutual funds. I think it's a big deal because I remember when I originally went to work for Smith Barney 20 plus years ago, I remember my branch manager calling me in one day and saying, hey Mike, how come you don't have more Smith Barney funds in your portfolio for your clients? And I couldn't believe we were having the conversation. And I said to my manager, look, when I run the screen, Smith Barney doesn't come up in the top 10. I think that's why you had these breakout industries like the discount brokerage house, right. Because people wanted independent advice. They wanted, when you have trips to Florida that can be won because you have a higher percentage of your in-house proprietary funds
Recommend the funds.
that you have been, that you've recommended to your clients. That's a conflict of interest, and
Or bring them in for one reason and switch them over for another.
and so I think the discount brokerage breakout industry, multi-trillion-dollar industry that emerged is very healthy for Wall Street.
So Morningstar used to be the unbiased view of funds and give you the layman's terms on what this fund does, what it doesn't, the rating system, very unbiased and somewhat independent.
Completely independent, and their analysis was relied upon by investors and brokers, independent brokers across the country. So when they announced that they were going to have their own mutual funds, it's a big deal. I mean, there's no way around it. It's a conflict of interest.
They're no longer independent.
Yeah, so to have TD Ameritrade, the largest independent brokerage house, be acquired by Charles Schwab.
Not so independent.
Yes, with their own mutual funds, we're now looking at a potential loss in the industry. The antitrust people will take a look at this, obviously, but we'd be real curious to find out what your comments are. Let us know below what you think of this acquisition by Schwab.
Yeah. Is it really good for you, the investor, or is it just good for Schwab?
I think this particular buyout is going to go on my suspect list. I don't know where it comes on yours.
I'm calling BS on this whole acquisition because I don't think it's good for the investor. I really don't. At the end of the day, it's just going to be one consolidated mess, and you're just going to get Schwab funds pitched 90% of the time. That's my opinion. I'm calling BS on it.
Okay, so we've got the BS meter that's been hit by TJ, and as you'll find out, our BS meter is the Buttonwood Society meter. We'll explain that in future episodes, but
we're the non-institutional voice because we're not high institution. We're more investor focused.
We're just two ordinary guys
cutting through the Wall Street BS
to make investing simple. So
I'm Todd.
I'm Mike. Thanks for watching.
Thanks for watching.
Thanks for watching.